Hey everyone, I'm Sebastian Purcell from the Art of the Bubble, and this is this week's State of the Market Report. What I wanted to address this week is pretty simple. We've got a big bounce back in the crypto market. We've got a little bit of a retracement right now, and the question on everyone's mind effectively is this a bull trap? Meaning, does it look like the start of a new bull run, but is it a fake out, or is this really the new thing, right? And if you look at those lines there, you can't tell from this image, but the red line there is the 200-day moving average, and the white line there is the 160-day moving average. The market very nearly tested the 200-day moving average several times, but never quite balanced through. People who are technical analysts would want to say, like, that's not a great indication. We're going to have some retracement for a little bit. And I think we'd have that anyway. I mean, that was a huge run up. Like, from here to here, that's a really big run. So I'm not too surprised that we didn't bounce higher. It's just a lot. So there's that. But, the real question is, okay, even if we consolidate here at some time, are we going to continue to go up further? Now, if you go ahead and consider some of the responses out there in the crypto world, you'll find that there are quite a few models, and they divide among a number of communities. One of the more popular models is the Bitcoin halving model. In fact, there's a whole firm called Halving Capital, which turns on the idea that whenever Bitcoin's issuance schedule halves, as it does every 4 years, then its price will run up because the coin is increasingly more scarce and there's less issuance of it, right? And for a while, you can see how this little curve worked. It seemed to make sense, but if you spend some time looking at all of the various images out there on the internet about this, you'll notice that they kind of stop short of the end of 2021 because we never hit this $100,000 prediction. We hit mid 60s and they kind of went sideways. So what I think that means is that this model is beginning to degrade in its predictive ability. And models often do degrade for a number of reasons. This would have continued to show a very high price increase in Bitcoin, and that top line anyway. Like, where does that top line come from? It's a sort of regression analysis, so it was never baked in to begin with. In short, this is one of those models that's out there, it's pervasive, and I think that it's less predictive than it used to be. Now let's look at some evidence for what might make us think this in the broader market. All right, so if you go on over to TradingView and you scroll down to like the market cap charts, you'll see something like this. This is the Bitcoin dominance chart. Bitcoin is the blue line up here, and you'll notice like about a year ago it was at 62%. The beginning of 2021, and like if you go back another month, it was at 70%, and Bitcoin has just dropped in dominance, meaning that its share of the total market cap has dropped. And other coins like Ethereum, and the purple here is like everything else combined, have risen up to take that place. On its own, that signals something pretty obvious. The crypto market is moving away from becoming just a sort of a Bitcoin thing, and now it's sort of evolving as its own thing. And if you take that back and just look at some charts here, again, we've got our white 160-day and our red 200-day moving averages. And what we see in these is that if you go back about a year, more than a year, you'll find that Bitcoin has the same price. February 8th of 2021 was the last time, like the first time Bitcoin punched up above the current price range. So it's been stagnant for more than a year. And I think that just shows you that in the previous slide, when we saw Bitcoin's price dominance dropping, that's, or rather its market cap dropping, that's largely the result of the fact that its price hasn't moved anywhere in more than a year, and other things have been moving. For example, Ethereum has done much better. It's been stagnating for 11 months rather than 14 months. That's when it first moved up. But, it's by and large, it's done pretty okay over this period of time. That was a really brief spike. And if you wanted to look at something more consistent, then you'd have to go all the way to August. Right, so Ethereum has continued to gain. It's done a little bit better than Bitcoin. Solana has been stagnant for about 6 months rather than 11. AVAX has been stagnant for 4 months. Finally, Luna. Luna is at its all-time high. Okay, so these stagnation periods aren't intrinsically meaningful in themselves, but they do tell us something when you kind of combine them and look at the broader market. What does it mean? I think it means that newer L1s, it shows you pretty much, have been doing fine. The idea of old cryptocurrencies, the idea that we're going to use cryptos as currencies, as replacements for the US dollar or something like that, haven't been market favorites for a long time. And that's why competitors for Bitcoin that really kind of dialed in on the idea and did it well, like Nano, have fallen well out of the top 100. So the market has moved away from that idea, and it's increasingly moving away from its dependence on Bitcoin's price movements as the brake and the gas pedal of everything that's climbing. And I think that means that the halving cycle, or especially Bitcoin's halving cycle, is increasingly less relevant, right? So that's not the main driver anymore. What else does drive cryptos? The macroeconomy. Let's be honest. As the market matures, it's going to become dependent on the macroeconomy, just like everything else, right? Which means that cryptos will rise and decline along with the health of the macroeconomy itself. Now, that doesn't mean, to be really clear, that cryptocurrencies are going to fall less. And I've said this before, but it bears repeating. Tech stocks like the QQQ, when that deflated in 2000 in the dot-com bust, tech stocks then were not less mature than the crypto market now. Okay, tech stocks then were more mature than the crypto market is now, and the QQQ still fell 82%. Okay, so as the crypto market matures, that doesn't mean that the price declines are going to be less severe. I think they're going to continue to be pretty severe for a while. They will be less frequent. Okay, and that's really the sign of a maturing market. So what does the macroeconomy show us right now? Well, I have a basic cycle indicator and a basic economic cycle indicator, and it's saying things are fine. As an illustration of what other people think in the market, I kind of like to look at the VIX futures ratio, and you'll see that the front month to the back month ratio right here is about 7.13%. Anything over 5 is optimistic. That just means that people right now are betting that this expires, I think, on April 19th. So over the next couple of weeks, they think the market's going to be fine. Notably, after that, they're a lot less optimistic. I've just noted these things fall below that 5% threshold. So they're less optimistic after the 19th. What does that tell you overall? Wisdom of crowds is saying the market is fine. And that's more or less what my macroeconomic cycle indicators say. It's fine. It's certainly been better, but it's fine. It's okay. And if that is the case, then it might make sense to go ahead and look at specific industries, right? And that returns us to this chart. The beginning, is this really a bull market? Or is it a bull trap? My conclusion here is a conditional one, and that's probably the best that anyone can honestly give you right now. The conclusion is if the crypto cycle is mature enough to respond to the macroeconomy rather than something else like Bitcoin's halving cycle, and I just don't think it's going to respond to Bitcoin's halving cycle going forward. But if it is more mature like that, then this is we have a higher probability that this is at the beginning of a bull run than a bull trap. All right. And even if this one bounce, I think, turns out to be inaccurate, longer term, you're going to see the total market cap of cryptos more or less reflect the macroeconomy, because as it grows, it's going to be increasingly a larger portion of the macroeconomy, right? So that's where we are at present. And that's what I want to say right now. Is it a bull trap? I think it's more likely not to be a bull trap right now. That's my conclusion, and my reasons for thinking that is because I'm optimistic that the market is maturing enough and we're moving away from old models like Bitcoin halving cycles. I hope that all makes sense. That's my general state of the market right now. And oh yeah, NFTs. You saw that thing at the beginning, the World of Women Galaxy. That market's taken off for sure. So there are other markets that are doing really well. I think there are certainly some bright spots. Even if, right now the market is taking a little bit of a resting period, I think there's definitely some bright spots. That's it for this week, everyone. Thanks, and I'll talk to you in the next one.